Welcome to the daily update. Today we're going to go over crude oil, March 13th, 2015. Market is in a bear trend. Bear trends are typified by market continues to hold negative structure, making new move lows and lower highs. Attributes are that we expect some good momentum, so momentum tactics will work well. We have a negative bias. This is a trend type negative market state, and we expect volatility to increase. Taking a look at the technical outlook, the market has been in a negative trend. We're definitely in the bear trend camp. If you're curious about the market color indicators, you can click on the help buttons to get a little more nuance of what's going on internally on the indicators. And if you want to learn more about the MC value, today's MC value is a -7, so it has us in the bear trend zone. And on the technical indicators, we've got the market color indicators. We've got some sell signals going on here in the DMI and the moving average strategies. Taking a look at the structure, we've got sentiment is above the market with the R level is above the upside pivot, so it's creating a resistance band above the market. We want to sell against this area, looking for sell opportunities. So the bear trend market state optimal strategy theme is going to be more in sell mode, where we're fading rallies, and any kind of breakdown signals we're going to want to jump on it. On the hedge side, we're looking for a break-in structure, a move off the downside pivot if we get a reversal signal there, or we get a market that moves lower and then breaks structure by moving above the directional. So I want to talk a little bit more about structure today on the price map. So if we click the help button, talking about the upside pivot, downside pivot creates what we call our critical range, and the directional is the pivotal level between the upside pivot and the downside pivot. It's more of a rotational inflection point. Leaning above that price point is going to be positive into the resistance pivot, upside pivot, and below the directional it's going to be negative, working its way into the downside pivot. So if we focus in on some practical application on the directional, whenever we do get a break out of the critical range, the directional becomes a good inflection point to determine if the trend is going to follow through. And also the directional can be a good indicator at the start of the session. So some of the best opportunities for a DIR trade are at the start, where we get a signal right off the get-go early in the session, and the market, especially in trend modes like we are in today, a bear trend, the market maintains that structure throughout the session. And when we're getting a signal at the directional, we're looking for targets at the DP and at the initial downside target number 1. So let's take a look at the session. So we come in at 720. Market states bear trend. Our sentiment is negative, and we look to identify what strategy themes are in play. And overnight, here at 3 a.m., we had a nice sell signal against the directional at 47.21, and that signal followed through and attained its initial target at the downside pivot at 45.96. So we're coming in, and the market has definitely established an optimal theme day where we are in a negative bias that's following through. It's performing to expectation. Bear trends are making lower move lows, lower move highs, so we've had this negative structure overnight, and we are going to anticipate that's going to continue. We are at support, so we may get a bounce and get an opportunity to either sell against the 46.60 level or maybe back up to the directional. We may not get a bounce, and we may get a new sell signal below the downside pivot, but we are not going to be interested in fading momentum at this time. We really need an exhaustive reversal signal to get us interested in any buys, so we are definitely looking to accept sell signals. So as we move forward in time, see how the market is holding structure here, and it's confirming this downside pivot as a good support level. And it continues to identify this area as really a strong support. So when we see this happening, as the market's breaking down to this level, coming in here, if the market did go a little lower, to jump on a sell here would be a little aggressive. You'd want to see that, you want to see that flush through and then retest it. In this situation where you're building a base here and the market's confirmed it, you can be a little more aggressive with even hard sell stops below the market if you want to add onto a position or establish a new position on the downside. At this point, we really can't accept sell signals. We can only accept them below this price point. That's real important. We need the market to take out this level. But your initial sales can be with a hard stop. You don't have to let the market flush through and then try to attempt to sell a pullback. You can use more of a hard stop when you see some structure like this forming. And then here we get a break and we take out that variance. Again, we know that from our directional trades, when we see this happen, we are looking for this downside target 1 at 44.85. And so if we are taking a signal here, that's where you're using this as your target level and you're making your stop adjustments based on that. Here, the market gave us plenty of opportunity to accept sell signals if your tactics are generating sell signals in that zone, and really continues to maintain that negative structure. And here they take out this minor support level, but they're approaching the gravitational area of that major support at 44.85. So we're using that variance around there, and the market dips into that zone. So as the market's approaching this level, you have to adjust your position management on your trail stops, because that may be all we get. So adjusting, using the structure of the price map, moving it down. The bigger structure for the day is definitely back above the downside pivot. You can use the structure points in your position management, and here the market attains our second target. So at this point, the market has really made a 2 APMD move. APMD stands for average price map distance. So we have a full APMD here and another full one. So it's definitely a good target. Markets, that's a kind of a typical, if you're going to get follow through, that's what you're looking for, 2 APMDs. So you have a move from the directional down to the DT1, or if you're taking a signal from the downside pivot, you're looking for the second target. So the market has made a significant move. We should expect a bounce here. Is it worthy to take that as a trade? That's going to be depend on your tactics and your style. It's definitely a hot potato. It's not a playbook trade. Playbook on the buy side, we're really looking for a reversal back through the downside pivot if we're going to buy it. So it's a very aggressive trade. We're kind of in think sell mode. So if anything, we want to continue to think, hey, the market's in a negative trend. It's been trending lower, and we want to respect that negative momentum. We are in a bear trend. Market's performed to expectation. We don't need to get turned around, but there is potential for a bounce here because the market is at a major inflection point and it has attained a 2 APMD move. And so we do see the market bounce. What's important to note here is that market's maintaining negative structure. We're focused on this level. How does the market react here? Is it going to reject from this point, or are we going to move to the downside pivot for another sell opportunity? And so if you are getting sell signals in your tactics here, if you are buying this, you want to use very aggressive position management, because you're really fading the trend. And here the market sells off again, and we see it move into the variance below the market, and so this kind of confirming the strength of this support level. And we're getting later in the session on a Friday, and volatility starts to decrease, and we just kind of go into the close at that level. So the crude oil had a good day, performed expectation. As the market comes down in a regular session opening, many traders are going to feel like, hey, I want to fade this momentum. This is where the price map and the market state come together. You have that alignment, and it's telling you this is a good support level. This is a good level to key off of, but we're more interested in accepting sell signals on a breakout through it versus accepting fade signals. So maybe your oscillators were getting oversold at this price point and saying, oh, I want to buy it. If you're just looking at the overnight data, it's kind of a gap lower, but that's not the case. So it's always important to have a fact focus. When you're making decisions, this price point, what to do, what's the facts? Fact is, we're in a bear trend market state. Fact is, sentiment is above the market, making sentiment negative. Fact is, the market's been holding negative structure all evening. Fact is, what strategy theme are we in? We're in an optimal negative strategy theme. Fact is, we're at the downside pivot, and that's the confirmation that we're going to move into an extension of that bear trend. And we know that the current strategy theme is lower move lows, lower move highs, negative structure. So instead of thinking that, oh, I think it's going to bounce, it's sold off too much, no. I want to wait, and I don't want to do anything until I get an exhaustive signal, or I'm going to wait for this market to give me a new negative signal, and I'm going to sell it below the downside pivot on a downside breakout. And then you have your trade vision of where can this go. Well, it can go down to the downside target number 1. So we can have a move from 45.96 down to 44.85, a solid full point. Even considering some slippage on either side, we can get 100 ticks. That's money. And having that trade vision, and the trade vision gives you the ability to stick with that position, let the market play out. Let those winners ride. Whenever you question something, whenever you start to think about what should happen, always go to the facts first. Keep the facts close to your decision-making process, and it'll keep you on the right side of the market. It'll keep you out of the middle. It'll keep you in the good positions and have you get out early of the bad positions. For more information on how to incorporate JS Services into your trade plan, please contact us at info@jsservices.com. Thank you for your time.